Your weekly digest of the biggest market stories from the past week. Join host Anna Sarin and financial expert Bruce Campbell as they go beyond the headlines to deliver cutting-edge insights into news that move the market. Proudly presented by the Canadian Securities Exchange.
Hey everybody, it's James Black here from the Canadian Securities Exchange, and I'm happy to be joined by none other than Bruce Campbell. Usually it's Anna Sarin sitting in this chair, but today it's James Black. That's me. And Bruce, how are you doing today for this market recap for the week ending May 13th, 2022?
Yeah, Friday the 13th today. Yeah, it's good to be here, right? There's so much going on. We could probably talk for 3 hours.
If I had the time and maybe even the energy, I would be totally down for that. It's been a crazy week. Obviously, a lot of fluctuation in the market. Today we're obviously going to talk about just the market sell-off. We're going to talk about, crypto. And just what's happened there, bounced around pretty hard. And then going to take a dive into the world of the mind of Elon Musk. And then we'll talk about things near home at the Vancouver Resource Investment Conference in Vancouver coming up next week. So I'm happy to dive in right now. Bruce, tell me what is going on? What is going on with the market sell-off? And, the S&P is an indicator here. What are we experiencing as investors in the market today?
Yeah, I mean, most of it revolves around inflation and what the Fed's going to do to try to control that inflation. So, on Wednesday of this week, the expectation was that, inflation might be a little bit lower. The market was sort of leaning towards that. And then when it wasn't, it just sort of all fell apart, right? The expectation is now that, the Fed's going to continue to raise interest rates. And I think the expectation for the rest of this year is still that they'll do 7 more 25 basis point moves. So, they could do that in 50 or 75s. And so, yeah, anytime rates are going up that fast, the market's not happy. So it's been, really volatile mostly to the downside. The intraday swings have been huge. And, we've seen a lot of money lost in the market in the last, really it's going on 6 weeks now. Unless a miracle happens, the markets will have closed down for 6 weeks in a row.
Yes, which I guess we'll say that we're firmly in a bear market. Is that?
Yeah, I mean, it's hard not to argue with that.
Mm-hmm.
This could be a correction. I mean, certainly there are some markets that are fully in bear market. So NASDAQ would be. The S&P isn't quite at that 20% level yet. It's down, I think, 17 on the year. So it's a little bit off the line, but the reaction and the way the market is behaving might not be labeled as, a bear market, but it really is.
Right. So you sent me one of your world famous charts, which has a lot of lines and color, and I need you to explain to me what exactly you're seeing at from your vantage point here in the market, and why you think it might be oversold.
Yeah, we're not surprised with what the move that we're seeing today, because things just got pushed so far. So if you look at this chart, there's 3 different areas on it. The very bottom level is the National Association of Investment Managers, active investment managers, and what it's showing you is they basically survey how fully invested they are. And they could be 100%, they could actually be 200% long, or they could be 100% short. And really, most of the time they're net long. There's only a few times in history where they actually dip below that zero line. But you can see right now on the bottom right there, they're 24% invested, which is quite low. There's only a few other times in history where it's been that low. So that's telling you that, market participants are quite bearish. And this isn't, a survey of what people are thinking. It's what they're actually doing with their money. And then in the middle, that line chart there is just looking at the RIDEX. RIDEX funds a family down in the US, and they have bear funds and bull funds. And, the bear funds, obviously, where people think the market's going to go down, and the bull where they think it's going to go up. Historically, the bull funds see more inflow than the bear funds. But what we've seen just recently is that the inflow is twice as much into the bear funds as to the bull funds. Doesn't happen again very often. You can see on the chart a couple of times it's gone over that too. It has marked bottoms. So we're not surprised to see this rebound. Things got really oversold. We've seen 6 weeks down. Today, has seen a fairly significant rebound, which is interesting because, we are seeing this move up, and you don't historically see that on a Friday because, you're going into the market. There's 2 days of risk where you can't trade. And so it just shows you sort of the power that's there. We'll have to wait and see kind of how much repair is done from all the damage and whether or not this is the bottom or it's just a bottom before, we head to lower levels at some point in time.
Yeah, we're definitely in some sort of V formation here. Okay, so you mentioned interest rates, and I want to talk to you a bit about what that means. So obviously, you said several 25 basis point moves in the next year is what the central bankers are talking about.
Yeah, so we've seen 3 now, and the expectation is that there'll be 7 more before the end of the year. Is what when you look at just sort of the financial reporting that's out there, and this is people being surveyed, that's what they think is on tap. That's one of the fastest in history. If you look back at some of the other rate hike cycles, they've made those same type of moves, but over say a 3-year period, not over a 1-year period.
Right. And so central bankers traditionally in these types of markets are trying to prop up the stock market and do things in that regard. But in this case, what you're suggesting is that interest rates are the number one thing they're trying to contain. Now, what impact will that have on the stock market? Because we just saw some pretty bad charts. What are you supposed to do?
Yeah, for sure. It is a very challenging situation because, in the past when, the Fed really tries to control a few different things. They try to control the level of employment, the prices through inflation, and then the stock market. And they don't officially control the stock market, but they've come in and defended the stock market anytime the credit spreads blow out to exactly where they are right now. And they're making a point of saying, like, we're not coming to the rescue here at this point in time. I think that changes at some point in time. But they're in a real tricky situation because they're trying to control inflation. It continues to be higher than expected. So we just talked about the fact that the April number was higher than what the market was thinking. And so if they start holding rates where they are, or they keep their quantitative easing program going where they're buying assets, then it's going to be really difficult to see those rates go down. What we're going to need to see is, sustained slowdown in the economy and economic activity before that inflation starts to disappear. So they're trying to balance. They don't want to see a recession, but they're trying to slow it down just enough, which is again very hard because they're looking at data that's trailing. They're looking at dynamic moving markets that have impact. So just as an example, what impact does all of the loss in the markets have on the economy? Do people not spend as much money? Do they cut back their purchases? What will that mean for spending in the next few months? So it's a real tricky situation that they have themselves in right now. They're stuck on the we're gonna really take a run at inflation and get it back down to kind of that. Usually they want it to be in sort of that 2 to 3% area on an annual basis, and right now, well, the number that was just reported was in the 8s, and the expectation is that by the end of the year it could kind of be rolling off because the comparables from a year before are fairly high. It could kind of be rolling off and be in that kind of best case scenario 5, worst case scenario kind of still 7. So it's still quite high.
Wow, well, there might be a day where you can actually put money in your savings account at the bank and actually get a return.
At this rate, yeah, it won't be too long.
Yeah. Well, okay. Speaking of returns and some serious lack thereof, the crypto market. So I guess this correlates to what's happened in the general market, but maybe with its own flavor. Obviously, Bitcoin got beat up pretty bad this week, and I'm just going to bring the chart up here just to kind of show what's happening with the Bitcoin price. That's the futures in US dollars, no less. But when we talk about crypto and we talk about Bitcoin, I guess is sort of the bellwether, the one that you first look at as an indication of the health of crypto market. This chart tells me one thing, which is that it's still highly volatile. When it goes up, it goes up. When it goes down real hard. And from your experience, and I know you might not necessarily be advising people into this or not, but how do you just generally look at Bitcoin as a holding, as an asset, as a professional money manager? What would you do with this and this chart and this asset?
Yeah, we still have a real tough time with it because what we're trying to figure out is how it fits into the universe of other assets, whether or not it's, going to be stable when inflation's higher, inflation's low, whether it's not, it's going to be stable when the market's up or market's down. And the thought is that, Bitcoin would be a hedge against inflation. So that, with lots of people compared it to gold. But that certainly hasn't been the case. And then lots of people talk about the fact that it would be stable when the markets maybe got volatile, but that again hasn't been the case. So that's how, we're trying to figure out is where we would use it. So, do we own it as a piece of a portfolio and always own it? And if so, why are we doing that? Is it because it's a hedge against inflation? Well, it's not showing you that that's the case here.
No.
And then from a stability standpoint, if we thought we could buy Bitcoin when the market was going to go down, well, then that would be a diversifier. But again, that doesn't seem to be the case. So kind of the judgment's out here on it at this point in time. We're not doing a lot with it. We watch it, watch and see what's happening. We have invested in companies that are in the sector. So either exchanges or miners or some of the service providers, but we haven't ever directly invested in Bitcoin.
Sure. And obviously the worst case scenario presented itself this week with the Terra Luna, the Luna coin. So I will bring the chart up here. Not what you're looking for as an investor. If you had bought at, I guess what would have been, it's meant, this coin in particular is meant to be tied to the US dollar. So it's supposed to mimic basically, it should be worth, $1 or, so what we're seeing here is it's worth a penny. Am I reading this chart right?
That's right. Yeah. It dropped 99% yesterday. So, and I'd actually heard that it traded negative at one point in time today. Maybe that doesn't show up on the chart, but that, probably shows that some institutional manager owns it and was basically just like, get it off my hands. I just need off of it. I will pay you to take it from me.
Yeah, it's no one's there to catch the falling knife, so to speak. So this is I don't know if you can come back from this because I don't know. Again, this isn't a real asset. You can't strip it for parts and sell it off for pieces. It's a coin. It exists in I guess in computers. So this obviously is the worst case scenario, and why potentially I guess you have to look really hard at what Bitcoin does before you ever look at this as a professional money manager. So yeah. Just shocking stuff, and quite dramatic. Okay, well, speaking of drama, let's talk about Twitter for a second. So I'm going to bring up Twitter's chart because, again, this company, famously almost purchased by Elon Musk, has been put on hold. The purchase has been put, quote unquote, on hold as he does more due diligence on the company and the prevalence of spam accounts. So a spam account being those not necessarily being run by a real human being like you and me. And so I get the sense that the transaction is going ahead, but look at what's happened to the price. It's taken a bit of a step down from the offer, which is around $54. Today, floating around $40. You got to tell me, again, you look at Elon and maybe what's happening here. Do you have any theories as to why he's slowed things down on this momentum?
It's hard to say. There's, he has got a fairly big position in Tesla that's been levered against his purchase of Twitter, and Tesla stock's been dropping. There's been lots of speculation at what point in time does he get a margin call where, he effectively has to raise cash or sell down some of his Tesla stock to be able to fund this. And so with, things getting squirrely, that was sort of one thing that's being speculated out there in the world, that he's willing to pay his $1 billion break fee and walk away, as opposed to, putting himself into some situation where he's going to get squeezed and have a margin call. And I mean, that's pretty famous in history where people over-lever themselves using their own stock, and the stock drops and then they, kind of lose everything. So I'm sure he doesn't want to see that. So, this will be one of those things where it's probably not the end of the drama, and probably going to see lots of twists and turns here before it's all done.
That's right. And the company's already going through restructuring and a hiring freeze. To my understanding, it's, I think the anticipation is that this will happen, but, before that all goes down, I agree. Nothing's simple in his world. Well, let's talk about Canada for a minute, because that's where we live, and that's where we are going to be next week at the Vancouver Resource Investment Conference. At least I know CSC is going to be there. And this is the Vancouver Resource Investment Conference presented by Jay Martin and Cambridge House. The reason I bring it up today, it's back. It's back in person. Obviously after a 2-year layoff, because of COVID, people are going to be seeing each other again at this show. This, other than PDAC, is probably the biggest mining show in Canada. Canada's famous for its junior mining companies. And there's going to be a lot of our clients there. But tell me, I don't know if you're going there, but there's been, I think, over 30 new mining issues listed on CSE alone this year, close to 100 since the beginning of last year. A lot of action in the junior mining space on the public market side. What's your observation with respect to what's going on there and why it's so frothy?
Yeah, I mean, we've talked about this a little bit in the past, just the fact that, we could be entering this new commodity cycle where, with higher inflation, commodity prices go up. And then that means, that projects that weren't necessarily economic before now are. And so we're seeing a number of different companies, both from a startup perspective to exploration perspective to a production standpoint, all showing up and wanting to get their piece of the pie and get into the business or expand in the business. So it's not surprising that that's what's happening. And it'll probably be very interesting at the show coming up here to see kind of what's there and the kind of the flavor of what people's thoughts are.
Yeah, absolutely. And we're longtime supporters of that program, and we'll be on stage. We'll have parties. We got all sorts of stuff going on. And we just hope that it goes off without a hitch. Because again, like I said, this is the first time in a while, and it's near and dear to me. I spent some of my first years at CSE working that booth and meeting a lot of good friends that I still call friends to this day. So, Bruce, what should we expect next week? You just mentioned that, we're kind of, it's Friday the 13th and the stock market's actually kind of coming back to life a little bit. Sort of like Jason Voorhees, or I'm trying to come to I'm trying to say. So
yeah,
what should we expect next week?
Well, just to see what kind of follow through we have. I would suspect that today ends on a positive note. If it doesn't, that's a really bad sign. And then to see how much follow through we have next week. So is this just like a short term bounce, or is it something that's going to be more sustainable?
Right. Okay. Well, we'll be here next week, next Friday. Hopefully Ann will be back. If not, I'll probably be here with you. So without further ado, this was a proud presentation of the Canadian Securities Exchange. This was your market recap for the week ending May 13th, 2022. That's Bruce Campbell. I'm James Black. Have a great weekend.